Hey everybody, Economic Ninja here. I hope you are doing great. We're gonna talk about gold. Guys, I'm gonna show you a chart. It's gonna be backwards, so you're just gonna have to get ready. I just don't know how to flip this camera. Yeah, check it out. See that chart? That is the chart of central bank gold demand, and it goes all the way back to 2013. Now, mind you, remember, we were in quantitative easing and there was all kinds of craziness going on, right? Back in 2013 still. They're still reeling from the Great Recession. 2013, right over here, this year, that is central bank gold demand. To say it's going up is sort of an understatement. Why? That is fear. That is straight up fear trade. And that is not from retail investors. That is from central banks themselves. They are, oh crap, we're screwed. But it's more than that. It's the Basel III Accord, making gold a tier one asset, which people need to realize how big of a deal that is. Before that was changed through the Basel III in Basel, Switzerland. They didn't understand, people didn't understand that gold was not a tier one asset. As a matter of fact, treasury notes were. Hey, ask Japan and China what they think of treasury notes now. They don't give a crap. They're selling them. Why? Because they got to prop up their currency. And not only that, they're probably selling them not only to prop up their currency, but they're buying gold too. The fact of the matter is, Russia and China have completely separated from the US. They've got a gold-backed currency that they're building, and it will be a success. I don't care how patriotic you are. You need to be able to see the tea leaves, read the tea leaves, and you need to see the writing on the wall. And why did I go into that? Man, I go into some weird accents when I get all fired up. When I get angry, it goes British. When I get excited, I go Indian. I don't know. But this is amazing. And I'm telling you right now, central banks are absolutely crushing it on the gold trade. The sad thing is, most people aren't involved in it. Now, I get questions all of the time. I'm gonna go through the story, but I have to say this. I get questions all the time about the confiscation. And I want you to understand something. When the US, through an executive order, was it 1933? In 1933, and it was Executive Order 11033, I don't even remember. It's been a long time since I've read it, was signed, and they confiscated the use of gold, right? Everyone owned it. Everybody had gold. Every single person had gold. Everybody in the country, everybody had some change. They pulled it out and like, oh, I got gold. That's what happened. They had gold and silver. Weird. The money was real money. Why? Because it was part of the Constitution. It's God's money. It meant something. Inflation was very low back then because it was made out of gold and silver. You can only make so much. But the government had this really cool idea, like we're going to print the crap out of this stuff. And we're going to lie about how much we got and all that kind of stuff. We all get it, right? Like the gold's really in Fort Knox. Point being is that everybody had gold back then. They confiscated it. Now, less than 0.1% of Americans have any physical gold in their person and silver. So, do you really think they're going to confiscate it? Do you think they're going to take everything from the smallest group of people, or are they going to take just a little bit from the masses, especially the masses that watch CNN and Fox and CNBC and all these other news outlets that pretty much just lie to you? I honestly tell you, in my personal belief, and this isn't financial advice, I'm just a dude with a bro hawk and a dream. It's an amazing dream too. If you could only see it, it's right outside that frame. It's huge, but it's about you guys. They're going to take a little bit from the masses. Just like Pelosi herself, Skeletor is going to jump right into action and make sure you're poorer and she's richer because she needs a bigger wall around her house, obviously lately. So here we go. Central banks are quietly buying gold at the fastest pace in 55 years. Man, those 50-year cycles are coming back again. Let's do this. Central banks globally have been accumulating gold reserves at a furious pace not seen in 55 years ago when the US dollar was still backed by gold, according to the World Gold Council, the WGC. And that's a three-letter acronym that we could actually get behind. I'm really big on that. It's a big deal. They're buying, and most people aren't. According to the World Gold Council, central banks bought a record 399 tons of gold, worth around $20 billion in the third quarter of 2022, with global demand for the precious metals back to will y'all go get that? Levels. Retail demand by jewelers and buyers of gold bars. Gold. I love gold. The smell of it. The taste of it. I once lost my genitalia in a rare smelting accident. Tell me what movie that's from. It's not a true story, guys. That was make-believe. Or was it? Was it? And coins was also strong, the WGC said in its latest quarterly report. Now, it goes on to say retail buyers of gold bars and coins also surged in Turkey to 46.8 tons in the quarter, up about 300%. You want to know why? They're going through hyperinflation. They're getting smacked with reality right now, and you haven't yet. Europe's next. They're going to be going into straight blown hyperinflation, and then America's after that. I know it sounds crazy. We're not going to be as bad as Europe and Turkey on a percentage basis because there's still deception going on with the US dollar, but trust me, you're going to see much higher prices this time next year. Much higher. Definitely over doubling. And you're going to see gold continue to surge. But the facts of the matter are, retail investment gold, the gold that's around in bar, coin form, things like that, is so small, it's a joke. And that's why it causes tightness in the markets regardless of price, because the premiums explode. And shipping delays happen right now, which we're seeing with the US Mint and other mints around the world, and just gold retailers as possible. Now, I'll put a link below to a company that I have an affiliate link with. They've got stuff that they literally have a section that says available for delivery right now. Yeah, go for that. And go get the cheapest stuff. That's what I do. I go buy the cheapest, right? Get it in your hands. Get it off the market. The COMEX is being drained right now. This is really happening. And I want you to understand, if you're worried about a $50 or $100 or maybe even a $200 price fluctuation, I'm going to tell you who's not worried. Central banks. So let me ask you this. Would you rather do what your professional advisor of money is telling you to do, and he probably doesn't even own his own home, let alone his own car, and he works off a commission, or should you do what central banks around the world are doing and buy gold? You see, money managers and money guys, they don't make money off of you buying gold, unless they have an affiliate link, and then you're not paying any extra anyway. So I guess that'd be pretty good. Maybe your money manager should have affiliate links to actually let you buy gold, but then that's it. Once you have it in your hand, they're not making any money from it. You make the money when you turn around and sell it and you use it for other goods and services, right? Definitely goods. You're not going to use it for services. Now it says right here, unfortunately, rising interest rates spoiled the party for the gold bulls, with exchange-traded funds storing bullion for investors becoming net sellers. Why? Because algorithms told them that the dollar is going to get stronger. But again, dollar is just a smelling turd in the punch bowl. So that's not going to be very long-lived. Over the long term, gold is going to hold its value in an inflation. And as a matter of fact, it's about to revalue itself. It's going to reprice all those dollars that have been printed and that are coming home to roost. That's very important for you to understand. It says, luckily for the gold bulls, though, the long-term gold outlook, Ninja, get your mind out of the gutter, appears to tilt bullish. Markets are currently primed for the fourth 75 basis point hike in a row, after which the Federal Reserve is expected to signal that it could reduce the size of its rate hikes. That's good news. This is why I did this story a little bit late. So we all know that the Federal Reserve raised rates 75 points, right? And this story, along with everyone else, is saying, but the street's expecting them to back off of that next. No. Jerome Powell jumped on the phone and goes, what are you talking about? I'm not lowering. Stand by. Hold my beer. Watch this. Hangs that phone up, picks up the phone. Yeah, world, economy, stock market, you listening? Yeah, I'm not going to stop lowering rates. I'm going to continue aggressive rates. Get ready for the pain. Boom. That's what he did. So right now, to say that this is an opportunity unlike others is an understatement. Can gold go down? Yes, it can. The paper price can sell off during a liquidation event. But guess what? A bunch of really smart people try and dive right into the precious metals market. We saw this in 2020, just so you guys know. When the paper price is selling off with the stocks, everyone's like, oh my gosh, I'm losing everything. Oh, Minnie, what are we going to do? No one's going to come to our theme park. And that's just because you guys are woke. Oh, crap. It's not my fault. As everything's crashing, the paper price of gold's going down, people dive into the precious metals market, the physical market, and they run up the price of the premiums because all of a sudden, boing, it's gone. Before the computers can even change the premiums, everybody goes in, dives in, buys it all up, and I'm telling you, it happens fast. I was part of the move in 2020. It was literally less than 24 hours. You had no time to even think. And if you weren't liquid and you couldn't dive in and buy silver and gold at those lower prices, you were ass out. Honestly, ass out. I don't know if this is a children's show, people. Point being is this. Start to think bigger, okay? Don't worry about the $50, $100 fluctuations. Yeah, over the long term, this is not a buy today and sell tomorrow trade. This is not even a buy today and sell 4 months from now trade, all right? This is long term. Central banks, they ain't thinking about selling tomorrow. They're going, oh crap, we have to save our asses right now, honestly. And when I say asses, I'm talking about donkeys, because that is the real name for them. All right, guys, that being said, the Economic Ninja, need some coffee. I am out.